Hey, what's going on, everybody? JPOW came out on Wednesday, letting the market know that the Fed now anticipates two cuts instead of four next year, which created some notable selling on the daily time frame, created some damage. But can buyers bounce back? We will get into the implications of that and more in this video, so let's get into it. All right, so starting off with SPY, obviously, market did not love the news that we would get fewer cuts in 2025 and definitely created some notable damage, right? So recall that the daily chart is fine or any trend is fine as long as on that time frame what's occurring is you're creating areas of demand, breaking out, backtesting, holding areas of demand, breaking out, backtesting, holding areas of demand, and breaking out. So the ideal situation for these buyers would have been to continue to hold over this prior area of supply, acting as demand throughout here and throughout all of here, which obviously was not the case. So the news was not received well on Wednesday. Took out this area of demand, took out this area of demand, but didn't take out the October 9th to October 30th structure, which I think, personally, I find it to be more meaningful than this guy because there's a lot more trade over here. So I'm not just talking about this structure, but if you look on the weekly time frame, this kind of looks like, one big old block over here, right? So this is like 2 to 3 weeks of balance over here, and this is more like 6 weeks, 6 to 7 weeks of balance, right? Just a half or so down here and a half of this week or so up here. So I would say that this is a far more meaningful area. There's a lot more volume that was traded here as well. If you just give it a second to load here, uh, there's a lot more volume traded here relative to over here. And also, we are just looking for a weekly higher low, right? So anything over 567.89 is going to be good for one. So, the question is, all right, well, can these buyers bounce back from here? And as of right now, I would just continue to monitor this October 9th to October 30th level, and of course, the low of the move, right? So, if you think about what happened here, so you have this knee-jerk reaction to the FOMC news, and then you don't get a lower low, actually, do you? Let's see, you do get a lower low, but it's only by 4 cents. So, kind of just balancing kind of a session on Thursday. And then on Friday, with the gap down following this news, you would think that sellers would feel emboldened by this gap down and want to build on it. But instead, you get a very, very notable rally that brings you pretty much all the way back up to the lows of this November 7th to 14th structure. So for me, all I really care about is can these sellers break under this low? And this low to me was a hold of this structure's point of control, right? Because you gap up pretty much under it, you don't advance to the value area low, then you rally above and just crush this high again at 586.12, which by the way is where these two low of days were had, right? Remember, the significance of this structure was already affirmed on the election gap with the gap up, hold the high of it, and then rally, and then retest it here where you have the value area high of the structure pretty much make for the all of these lows, except for this day, which is just the high of the structure making that low. Then you come back to the Wednesday and Thursday selling, and those low days are pretty much made right off of this guy. So again, clearly these structures are being affirmed, including this fella over here. Um, yeah, including this guy over here, which the high of the day was made right off of the value area low. So in the next week or so, if what we see is just further balance in here that does not take out this low, I would say this is still constructive for these buyers. It's not the best case scenario. Of course, the best case scenario would have been to just break out over here, hold back test, and then continue on. The next best case scenario would have been to hold the back test of this guy. And then now, because we've already seen damage, what the sellers need to get done is to make a new low here. They need to set this daily lower high here at 595.75 and break under 580.91 to set this daily lower high. If they can't do that, or if you continue to see moves under this low that don't find acceptance or don't even touch the value area low of this structure, then this structure is still being affirmed as demand. If this structure is being affirmed as demand, then we're worried about this supply and this supply. And so balance like this would be constructive relative to this, which would increase the probability of a weekly higher low being set. Now, of course, if we start trading through 598.16 and 607.55, then it's right back to business for these buyers, okay? So, whether or not that shakes out, we don't know. All we can go on is our references, right? How does price respond to this low? Does it make it down to the value area low? Can they find acceptance back over 598.16, etc., right? So these are really what we should be focused on next week. So that is pretty much it for the SPY here. And then moving on to the Qs. So for QQQ, it's same but different, right? So you have this move, this major selling. You do break this daily demand zone, but you hold this guy. So again, it's a very similar situation where yes, there's a decent amount of value that was established here, pretty high volume node over here, but this guy is kind of sitting on top of this much larger structure, right? So this is not really a gateway structure into anything, right? This is a gateway into this larger block. This is just standing, right? This is just free standing, I should say. Like it's not really a part of a much larger structure. So again, I consider this to be more meaningful, and similar to the SPY, the ES, we have a lot of space for a weekly higher low over 483.75. This really isn't much of a retracement from the last low. Let's see, it's about a 50%. Oops. I think it just ever so slightly broke the 50. I know it's kind of hard to see right now, but ever so slightly broke the 50. So really just a halfback retracement right now. Not that big of a deal, despite the fact that we did create structural damage on the daily time frame. So again, what do we care about? It's very similar, right? Are they going to find acceptance under this guy? So the buyers found support essentially at the low of this November 7 to 14 structure. It's roughly the same as the value area high of this next area lower, so this daily demand zone just a little bit lower. And again, you can see how this structure was affirmed here, right? This November 7th structure affirmed here. The low of the day was made right off of the high of the structure, and then the Thursday's low of the day was made pretty much right off of the value area high, and then Friday's low of the day was made pretty much right off of the low of this balance over here. So this is our key structure now going forward. Of course, we care about the low, 509.29. It's the same deal, right? If the sellers can't trade through 509.29, or if they do trade down through 509.29, but don't get down to the point of control of this next local demand zone, and then can hold over 513.24, and we should just expect balance like this, right? And balance like this, again, would be constructive because this is really the last major area of the weekly time frame. But if you zoom out to the weekly time frame, this hot mess over here is the last area where there was more or less sideways trade, like 6 weeks or so, 7 weeks or so of sideways trade. So despite the fact that this selling looked really bad on the daily time frame, it's percentage wise it's huge, right? It's a 3.6% day on the NQQQ, and then it's 3% pretty much on the SPY ES. So massive day of selling, broke daily demand, but then you just zoom out a little bit and things don't really look that bad. It's really just a matter of, can these buyers get their footing back by reestablishing this area now acting as supply as demand, right? That's really it. So next week, what we care about then, acceptance over 521.74 is pretty much buyers right back to business for QQQ. If new lows that don't come down and test 505.17, then the sellers are not really having an easy go at it, which would increase the probability that buyers are going to bounce back. Okay. And then, let's see, oh, right, we do trade. This is probably a stop out, right? Last week, I think we had like a more aggressive zone. So that's a stop out back into this zone of old. That's funny. This zone of old already shook out to the target. So it's what it is. You're not gonna get every single idea, but I think the Qs worked out okay, right? I don't know. Let's see. I use the levels and not these trade zones, of course, so I don't recall. Okay, so the Qs, we were a bit more conservative. Why did I make that different? That's interesting. Anyway, I think it's just a bit of a mistake. This is probably just a bit too aggressive over here. Anyway, so for the Qs, came into our trade zone at this point now, any initiations here, if you're going to use these trade zones as your guidelines for your own trades, whenever you bounce out of the trade zone and then are approaching an area of supply, assuming we're buying right now, which we are, then you do want to be looking to take your profits out, right? Because the nature of these trade zones is firstly, we always want to be using these zones when there is extension, like some kind of oscillator extension, right? Increases the probability that there's some kind of short-term relief bounce. On the bounce, those oscillators cool off. So that part of the edge is no longer present, and we just want to be coming out of the trade at least partials, such that if we were to roll over, make new lows, and get things extended again, we still have some dry powder, so to speak, to continue looking for play. So that's how I would handle this. If you use this trade zone, you have any initiations in here, chop it up. If lower low and extension, you can look for those plays again. You don't really need extension, honestly. Like that's just one of the parameters that I like for the edge. I don't mean to suggest that you absolutely need it, but I do recommend it. It's what we do in the chart guys very often, especially Dano. Um, so that is really it. Potentially setting this daily lower high here at 524.82. Got to break under 509.29 next week in order to set that daily lower high here. And that's really it. I still think this is a fine area for trade, right? If you can hold over these two areas of demand, then we should just be looking for balance like this, right? Like this. As long as we're holding over this guy, then, you know, and not over the all-time high, then we'll just look for some sideways bounce, which is fine, right? We look for some sideways trade like this, just like this guy broke back down into this structure over here, then just kind of moved sideways because there was no acceptance under the gateway structure. It's kind of the same dealio right now, right? If these sellers can't find acceptance under this gateway structure into here, well, then we should just expect some sideways trade. Again, very similar to this, right? So then what were we watching out for over here when you were holding this back test, like when we were holding this, the back test of this guy, right? What we were looking out for to see if the buyers would get back to business, it was acceptance back over 513.24, which they do make, and then the low of this session is pretty much made right off of it. It's the same dealio now. That's what we care about. Just like this bounce was made right off of that point of control. What was that, right? That was the buyers testing this structure to see, is it going to be affirmed as supply? It was affirmed as supply on Thursday, made for the high of the day. It's still being affirmed as supply right now, as long as we don't find acceptance under 521.74. But again, this is a very notable bounce after a gap down. Not exactly indicative of, like, you know, everything's falling apart kind of a deal. So we shall see. Moving on to the RUT. So I think the RUT is also in our trade zone. So it's back testing this key daily demand zone now. So really what we care about the RUT, not very much has changed. Really nothing has changed, right? The trade zone that we used over here is probably the same zone right now that it's in. Well, that one was an older one, I think. Yeah, so this is still very valid in my opinion, right? Like if you are a buyer in the RUT, the only thing that you want to be considerate of now is, remember, the reason why we were buying the RUT was for the potential of these small caps to benefit from rate cuts, right? A rate cut environment, because lower rates, you know, just makes their debt cheaper. They can refinance their debt. They can borrow more money at a cheaper rate. That would have benefited a lot of these small caps, which is, you know, looking like it's not as much as the case anymore. Like they're not anticipating as many cuts, so it just, you know, it's not as good. It's not as ideal for the IWM, small caps, and the small caps were still lagging. Like even though these plays were good, they did play some catch up. They were flirting with a break into all-time highs. They didn't find acceptance. So you just got to call it for what it is, right? If it's not going to shake out, it's not going to shake out. So anyway, at this point now, we're back into this trade zone that was shared back here. I still think it makes a lot of sense. It's just based on this demand zone holding. If this demand zone holds, then these buyers should be trying to make their way back up to the all-time high supply. That's really it. All right, for IWM, not really much else to say there. All right, so let's get into Bitcoin. No, the Dow. Oh, the Dow also traded through our zone. I thought we were conservative here. Let's see. Hang on, let me see what we're doing over here. Oh, I think I set it up saying, okay, well, if you want to be a bit more aggressive, you can use this guy, but we were primarily focused back here because this volume node was very high over here. So, okay. So this is really the key structure, right? The arrows here, we were focused on this guy because there was so much more volume traded here. Despite the fact that this structure over here was affirmed on this move, still, we were more focused on this structure because of all the volume that was traded here. So I still think this guy is a pretty reasonable location for trade. That being said, this is notable, right? A notable failure to get not touch the point of control 432.57 of this guy over here. So these buyers are not really picking up where they left off unless they get back over 444.66. But even if we just wanted to see a healthy consolidation over this structure again, because this is fairly notable sideways over here, then you need acceptance over 432.57 first, right? Either way, you need acceptance over 432.57. So now this structure clearly acting as supply with a high of the Thursday session made right off of the value area low, a notable failure to get to the point of control of this structure, and then a close pretty much right on the val. So this is the key in the next week for the Dow. If these buyers can continue to press over 432.57, then they're pretty much picking up where they left off over here, but then they still have this daily overhead supply over here. It's the all-time high supply, obviously. So very notable failure to get to the point of control at 421.08 as well, though. So it's the same dealio, right? If these sellers cannot make a new low next week, or if they make a new low and don't touch 421.08, that's going to be pretty indicative that the selling is not as strong. And that's really it. That's all I care about. personally for the Dow. I still think this is a pretty reasonable area. If you use the aggressive zone and you stopped out, it is what it is. Sometimes you stop out. Oh, actually, I guess we could talk about that after for review. All right, so for the dollar here, so the dollar, I think this is still very reasonable. Oh, actually, this was done in the live stream. So this trade zone, if you're still in a runner from here, now that you broke to a new high, I think it's reasonable to walk your stop under here. Very, very notable development from the dollar to see all this follow through over 106.335, which is just the point of control of this supply, which is contained price over here, over here, over here, etc. Many times price has rejected this. It's pretty much the key supply zone, right? It's contained price since 2022. So this is the most follow through over the point of control of that structure, that key. Well, it was supply, now it's acting as demand. This is the most follow through over 106.335 that you've seen. So this is a trade zone that I shared in one of the live streams, and I think it's very reasonable. Essentially, just looking to bottom fish. It's the potential that 106.335 would turn into support, and if not, then you're just kind of bottom fishing off the lows of this local range, looking for a responsive trade to stay within this range. You can see the targeting is just based on the other side of the range. You're not looking for new highs per se, unless of course some of the position is not stopped out. If some of the position is not stopped out, then then of course we can carry that into new highs. But I would suggest, if you use this kind of a setup here, that you come into the trade near the lows of the range, chop it up, partials at the other side, and then just leave stops for your runner under the lows of the range and see if it'll shake out. No different than over here. And if you use this trade zone and you're just walking to stop up, then just under 105.345 is reasonable after this breakout. Okay. I mean, now it's already broken out, even though it's not seen follow through. That's the way that I do it. Once you have sideways breakout, I walk the stop. It's not perfect, but it does a pretty good job of leaving, some leash for a trade to not get choked out. Okay. So that's pretty much it. Moving on to NVDA. So NVDA came into this. Remember, this is our more aggressive trade zone, right? Because I'm personally viewing this as like the potential for a very large area of balance, kind of like this or kind of like this. And if that's going to be the case, then throughout these large periods of balance, the key demand zone is tested many times. So I'm kind of looking for a repeat of that, right? Just like this structure was back tested here, here, and here. I'm not going to be surprised if this structure now gets back tested multiple times. That's what I would prefer. I would like to see some long-term consolidation of these gains, because it's a lot of gains, right? Like NVDA rallied a lot ever since the breaking out of this demand zone. It was even just breaking out of here, like that's not even from the October low. Just breaking out of from here, it's already gone like 200% or so. And so it needs to consolidate these gains. The further that something runs, typically the more time it takes to consolidate those gains. And so if we continue to see probes, right, take out some buyers, right, stop some late term buyers. So anybody who's like buying on this leg, if we trade all the way back down here, they probably get stopped out. And then it's really a matter of, will the buyers that were present here continue to hold their positions, and will we attract new buyers with the lower prices as we come back and test this area where there was much more value established. You can see how much more volume was traded here relative to all of this price action up here. So this is our more aggressive trade zone. It's already come into it. If you initiate off of the highs of it, I do suggest taking some profits no later than 140.76. That's the prior all-time high over here. You can see how it's been a battle for this level. Perfect rejection here, battle around it, try to hold the back test of it, fail, hold the back test of it, but can't build off of that, etc. Lower high off of it, etc. So if you initiate here, I would throw my stop under here, chop it up no later than here, and then see if they can break out from here. And then I still think this is reasonable for like a more aggressive operator to be looking in this area, but I personally would be just looking to like probably start with selling puts. Like if we see lower lows here, get down to like 114.71, maybe I'll start selling 105s, roll down to 100, something like that. I still have a pretty sizable NVDA holding, so I'm not too excited. I mean, I'm not too interested in being too aggressive here, but I would not mind a reload by any means. So that's it for NVDA. Moving on to Bitcoin. So Bitcoin, again, continues to just hold over this guy, right? The high of this range at 93495 made, rather the value area high made for this low here. The high of the structure made for this low, made for this low, made for this low. So all of this is still very constructive as long as they can hold over this daily demand zone. And again, even if they didn't, if they traded down here, I would actually prefer that, right? Like I wouldn't mind it. Essentially what's happening right now is like if we lower low here, it's very similar to what happened here, right? Like if this largely one-way trade, this breakout is not negated, then this consolidation was healthy. We talked about that for freaking months, right? When all of this balance was going on. It's the same idea now, right? If these sellers cannot trade through this area of one-way trade, or if they do trade through it but hold over the high of it, then it's no problem. Just like this low was just holding over the high of this guy, and just like these lows over here, this guy over here, and this guy over here, where were these lows, if not right where there's some two-way trade, right where there was some two-way trade on this one way up, you know? So like if you look at this low over here, where are these lows, right? These two lows over here, if not more or less where there's overlap over here. You see what I'm saying? So where there's some congestion, you have more probability of there being some stalling there. So I would be focused then on this guy and this guy on the way down. If we trade through this structure here, crack through this guy, but get caught up here or very extended into a test here, we can look for like a very aggressive play here or a very aggressive play here. But me personally, the most conservative, I would most prefer to be down here. Okay, so that's pretty much it. Space for a daily lower high, anything under 108388.88 going to be good for one. And need to break under 92115.66 from here in order to confirm a daily downtrend. All right, so that's it. 89541.25 remains super key for Bitcoin. Moving on to Ethereum here. So for Ethereum here, it's same but different, right? So similar situation. Obviously there's no new all-time high for Ethereum, but we did get caught up in this structure again. So remember, we were watching this key structure because it's what made these highs over here. It's what made these highs over here. And lo and behold, once again, it's made for a major high over here. The high of this move pretty much set right off of the value area high. You can see struggling to get over the value area low of the structure, flattening out at the point of control. Try to hold the val as support, etc. Cannot. And so space for a daily lower high, anything under 4109 will be good for one. If it can break 3095.65 from here, that'll be a daily lower high and lower low. Very notable failure to not touch down on the point of control, 3083.33. That's this guy over here. So that's just the structure sitting at the low of this much larger area we're trying to resolve right now. Notable failure. I still want it here, right? Because first of all, this would be a backtest of this local demand, and essentially we're still just trying to resolve this, so we should just expect price action similar to this as long as we are holding under this supply and over this demand. So that's how I'm looking at it, and that's really it. I'm a little bit more interested in Sol, honestly. I don't really have any exposure to Sol, and it's already backtesting the highs of this guy. Yeah, I missed out on these pass back overplays playing well, I was live streaming, and I also did a NQ bounce play. It wasn't great. It was okay. I didn't get the big move. I just got like a little bit of it. I don't know. I think I'll hold off on that for now. All right, so that's pretty much it for Ethereum, and then moving on to CCJ. So for CCJ, all right, so back into the where are my drawings? Okay, whatever. What's this guy? Okay, that's the all-time high supply, or the prior all-time high supply. All right, so for CCJ, we're back to back testing the prior all-time high supply over here. Bit of a head and shoulders look to it. So at this point now, if this is going to be a head and shoulders, if you like to trade head and shoulders patterns, I really think, this is a really great way to go about it. Is just make sure that you can mark up the supply or the demand, and that makes up for the head, right? So if it's a head and shoulders, it's going to be supply. If it's an inverse head and shoulders, it's going to be demand. And so because this is a potential head and shoulders, it's obviously we care about the supply zone over here. We'll mark off the low of it as well. Right, you can see once you break down, value area low rejection, and then break down. So if this is going to be a head and shoulders pattern, this supply should continue to hold for sellers. So if you want to be a bit of an aggressive seller for CCJ, you can be looking for plays off of this area of supply and just looking to come back down here. If you're a buyer, I would really much prefer if we could get all the way back down here. Now I know that's like a 40% decline from here, but like CCJ does that. Look at how long it spent going sideways, over a year of trading sideways here, and it just went back and forth within this range. So I would not be surprised if we were to revisit these lows over here, but we'll just take it one day at a time. So again, this is a bit of an aggressive sell. It's actually a very aggressive sell because, you know, CCJ is technically a blue sky bull. It's been breaking out into new record highs, but something like this makes a lot of sense if you're looking for that potential head and shoulders for a sell for CCJ. I'm not going to be doing this trade. I would prefer to still focus on the buy, but something like this, looking for a back test of the head, of the supply sitting at the head, and then looking to just come back down to the neckline. And if this follows through, then, you know, I wouldn't be surprised if you come back and test this area of demand down here. Okay, I don't know that I would run this again. I wouldn't honestly run this again, but again, I'm a very conservative guy, so I would prefer to be, you know, all the way back down here, which is why I missed that move way back here that was also set up in these videos. So, you know, adjust to taste, so to speak. What works for me, not necessarily what's going to work for you. Okay, so that's pretty much it. That pretty much covers it. So I guess we could do, you know, I think it would be good, honestly, to talk about the SPY situation. So what happened, at least for me, throughout the week was I didn't really do much of anything Monday and Tuesday. On Wednesday, I attempted some bounce plays and I fumbled it. So I can talk about that. The trade was totally fine for a while until I fumbled it. So I was looking for bounce plays. I was waiting for key levels to be tested. So I was waiting for like the 598.16 level to be tested, 594.37, and then 586.12. So I was more active at these levels, looking for low time frame 1 minute, just day trading, right? Looking for some potential bounce plays because, you know, up until this point, the market has just been doing a good job of holding back to the prior areas of demand. So like plays down here were very good, plays down here were very good. So I was just looking to do that same thing, even over here, etc. Just pulling back to prior areas of demand had worked really well, especially if there was like hourly extension. And we're looking for a daily pivot, which would have been the case. So, you know, I was just doing what I've been doing for the last 3 quarters or so, and that was not easy. There were bounces to be played on the way down, and then the one that I missed, so I put a starter on, I forget, the first one when we got really pulled away from the deval, I think I want to say was here, and then we broke down lower, but things were so extended that I was just in the, you know, flip mode, so to speak. So I was just buying lower lows like Dano very often does, and just based off of these daily levels, and then on any kind of little bit of a bounce or whatnot, I would just flip it out, and I was just holding my starter to just keep reducing my cost basis. And then on this move, I was doing the same thing, and I missed the sell here. So I was looking for an exit at 6018. I missed that, and then I didn't stop out of the positions that I was flipping to lower cost basis, and then this was like a 50-point slide or so, and so I ended up taking more damage than I anticipated. It was still very reasonable amount of damage, but it was a pretty notable mistake, something that I have not done in a long time. And, you know, I'll be honest, it was very destabilizing. Like it almost made me feel like I reset, right? Like it was not great. I didn't feel good about it, even though the dollar amount was, I mean, it's a notable dollar amount, you know, whatever. I'm not like it was certainly notable, but still within my risk tolerance rules. It's just that I hadn't gotten that to that point. I hadn't made this kind of mistake in a long time, and so, you know, all of a sudden you have like this like doubt crept back in. And I think in the past that probably would have like made me sit out for a few sessions or whatever. I mean, if you're part of our community, you've probably heard me say that like maybe a few years ago, whatever. Okay, I had a rough session. I'm gonna take some time to reset. But you know, I sat down with it and I just kind of like I like to visualize, right? So like whenever I make kind of an error, and it doesn't have to be with trading, although it's very often with trading, if I make some kind of perceived error, then I will just revisualize that thing again and then kind of train myself, recondition myself there, right? Because that was a bad rep. The error that you made was a bad rep, right? And so in order to fix that, you need good reps. But if you only wait for opportunities to present themselves when they're live, they're going to be really few and far between, right? And so you're not going to be able to get that solid conditioning in. So a really good way to get around that is to just reimagine that same exact situation, but instead of you making that mistake where I was waiting for that like one more tick or so, three ticks to come out of the position, or rather, the mistake was really not the missing that, right? Because if I'm gonna miss, I'm gonna miss that. The mistake was not letting it get too far. I should have stopped it out, right? So I stopped it out somewhere in this move, and it was way more than I should have. It should have been like a it should have been like a 3-point stop, and it turned into like a 35-point stop, which anybody who trades the ES, you understand the difference of that is quite large. So anyway, so yeah, so I went to the drawing board, essentially visualized myself doing different things. So either being not as greedy with the chop, because the 6018 chop is, like it's only 2 ticks off of the prior low. We shouldn't anticipate that it's going to get so close to it. So that was one way that I imagined it, just being more aggressive with these chops. And the other one that I focused on was just making sure that I stopped out, right? So just imagining that happening, remembering that like I had already done some successful flips. I was keeping my cost basis low. And then remembering feeling kind of egoic the moment that I should have stopped out, thinking, oh, I can probably get out of this fine. And then nipping that in the bud, right? Saying, wait, hold on, you're being egoic. You just need to stop out here, and then you can. The thing is, I could have kept playing comfortably had I just stopped out here. Like I could have probably been in for the bounce at the end of the day. So, and this bounce at the end of the day was at a meaningful level. So I kind of shot myself in the foot here by shaking myself up. So that's pretty much it. But some redeeming factors. The next day, I did join sellers, and we can look in the features room. Let's see. On Thursday, I did join the sellers, and then on Friday, I got a bounce play and a little higher low play, and then the big play was at the end of the day, was the sell off of this value area low. So here, let me just pull this up here. Try to be really quick with it. Let's see, on Thursday, we don't just talk trading in the thread. Let's see. So there's a rundown that we always do, just sticking around, having some fun there. So I saw the rut here at 937, and can you see that? Sold RTY on the pass back under the Depop, and I also noticed that some plays for the developing point of control and developing value area only present themselves on the very, very low time frames. But anyway, on Thursday we had this move over here, and then we were testing. Oh gosh, what were we testing? There was a key level. I think I might have just been looking for the value area high to hold, but either way, I joined the sellers on this Depop pass under over here on Thursday. It was at 37, yeah, so right here. And then we chopped it up. I chopped it up again at the prior day's close, and then I stopped out the rest on the during the on the regular trading hours on Friday, because I walked the stop down. So that was great, very profitable, very, very profitable trade. Made up the ES trade and then some very quickly. I'm very pleased with that, right? Again, like I think in the past, I wouldn't have done like a visualization technique right away. I would have just started programming it into my morning meditation, and then I think that it takes more time for you to see the results of that if you don't do it like right away. It's kind of like how they say that Tetris, I don't know if you've ever heard this, but they say that Tetris is really great for like people processing trauma. Like if you've just gone through a traumatic event, apparently if you play some Tetris, like there's some like black magic puckery in your excuse my language, in your brain that kind of helps sort out that trauma or whatever. So I think like it's no different than like if you start bleeding out, like the faster you get to that wound, the more likely it is to heal well, right? So anyway, so we did that, and then on Friday did a live stream bounce play for the NQ. So for the morning stream on NQ, we did a live stream trade where I bought the pass back over the open looking for a bounce play because the QQQ was testing this guy. QQQ was testing this major low. I talked about it during the live stream. It was an initially stop out. on this move down, and then I did it again because of the same context. Chopped it up at a 1R, and then chopped it up again. I got two exits because we're just looking to the structure on the left. So here's the overnight session, and the exits were just based off of what was going on to the left, right? So if you're gonna make a play over here and you're a buyer over here, then the next relevant structure is over here, right? We're looking at this guy. So I took one chop at over here, right? We're using this structure now as our reference, right? So on the live stream, I took an exit here, stopped up the rest, and then missed this monster move. But again, if you trade NQ, then you know that 40 points and 85 points is fine. is quite dandy. So yeah, and then later in the session, I also captured a little bit of a higher low trade, and then the solid one really was the trade off of the ES. So here, hang on a second here. Okay, so 1236, I bought the NQ backtest on the Depop. I don't really care about this one, honestly, because it didn't really matter that much, but it was for a 15-minute higher low play that was over here. Buy that, chop it up, stop out the rest, whatever. And at the same time, however, or similar, a very similar time. So that was at 1236. And then very soon after, let's see, I sold the ES. So at 1243, I sold the ES SS break looking for the Depop for a chop. So that's this guy over here. That was just this guy, right? So I sold this SS break. So this high of the day, remember, again, this is how you can use these levels that are shared, right, for day trade as well. This high of the day, or the high at that moment, was a high of the day as well, was a back test of this guy. So we had just ripped from the low of the day, come into this key test of this supply, and we just pulled back from that guy. So after pulling back from this key daily reference, okay, this structure is being affirmed as supply. I wouldn't mind having some protection for some of my longer term holdings. So I figured, okay, well, and I also just bought that NQ long off of this higher low. So I think, okay, well, this is an SS break after we just touched that level here. This very low risk. I just used the meme stop here and did not get stopped out, fortunately. And this one shook out quite well, where I got the chop. I forget now. I took like the chop. I forget. Oh, I took the first chop where the Depop was over here, and then another exit above the regular trading hours high, and then I just rolled some of those proceeds into puts for next week just to continue to have some protection. So anyway, basically my point is just that if you are the kind of operator who you get shaken up, like you can, I beat up on myself, right? So if you're that kind of a person, and you like to take breaks after a session like that, and maybe you've missed opportunities after during a break because you felt like, okay, I should chill out and reset a bit, which is fine. Like I think that's totally fine if you do that. But if you do that, I'd also suggest that try this visualization technique. I think it's very, very helpful. I'm telling you, in the past it would have been very hard for me to come back into the next session and get right back to business. And I think the next, all of the trades following the error, my perceived error, it's definitely an error, were a lot easier because of the visualization practice. It's not to say this is the first time either. I've obviously done this kind of a thing many times. So the more I do it, I think the more effective it becomes, right? So like if you have edge, and you just sometimes your psychology, your emotions inhibit your ability to execute that edge, try this technique. I think it's incredibly valuable, especially if you are banging your head up against something. If there's something that you have been struggling to improve on, right, because you're just not being presented with the amount of reps in your natural environment, not presented with the amount of context or circumstances for you to get those reps in, just do it in the old noggin. Like your brain is really dumb. It does not know what is real. It does not know what is fake. So like if you just pretend, it'll still train itself, essentially. It's kind of like the Matrix, right? Like when they jack in or whatever, and they all of a sudden he knows kung fu. It's kind of like that. Not exactly, but kind of like that. All right, so this turned into a doozy of a video, but if you made it this far, I appreciate your time. I appreciate you sharing some of your time and energy with me. If you wouldn't mind hitting us with a like and subscribe, we would appreciate that very much. Costs you nothing, helps us out a lot, tells the algo that we are creating content that is worth viewing. And so that is pretty much it. So yeah, hope you guys enjoy the rest of your weekend, and I hope you enjoy your Christmas or holiday, whatever you celebrate or don't. Farewell.